Welcome to IHANIC's School of Business and Administration's course Introduction to Business. This is Lesson 1, The Role of Business in Society. Before we begin, it's important to understand that businesses play a significant role in our economy and society. From small, locally owned stores to large, multinational corporations, businesses create jobs, generate income, and produce the goods and services that we rely on in our daily lives. So, what is a business? A business is an organization that produces or sells goods or services in exchange for profit. This profit can be used to reinvest in the business, pay employees and shareholders, or be distributed in other ways. But the purpose of a business goes beyond just making a profit. Many businesses also have a social purpose, or a reason for existing beyond just financial gain. This can include things like improving the lives of customers, providing a necessary service to the community, or promoting social or environmental change. For example, a tech company that creates software to improve access to education for underserved communities is fulfilling a social purpose in addition to generating profit. Similarly, a clothing company that sources sustainable materials and practices fair labor practices is fulfilling a social purpose, in addition to selling clothing. It's important to note that businesses can also have negative impacts on society. For example, a company that pollutes the environment or engages in unethical labor practices can harm both people and the planet. That's why it's important for businesses to consider their social responsibility and strive to minimize negative impacts. Now that we've discussed the definition and purpose of business, let's take a look at some of the different stakeholders that businesses interact with. These stakeholders include customers, employees, shareholders, suppliers, and the community. First, let's define what we mean by stakeholders. A stakeholder is any individual or group that has an interest in or is affected by the actions of a business. There are several different types of stakeholders, including 1. Customers. Customers are individuals or organizations that purchase goods or services from a business. They are an important stakeholder because they provide revenue for the business and drive its success. Businesses rely on the satisfaction and loyalty of their customers to continue operating, so it's important to consider their needs and preferences when making decisions. For example, a restaurant that regularly solicits feedback from its customers and implements changes based on that feedback is considering the needs of its customers. 2. Employees. Employees are individuals who work for a business. They are stakeholders because their well-being and satisfaction can impact the success of the business. Companies with high employee satisfaction tend to have lower turnover rates, which can save on training and recruitment costs. Additionally, happy employees are more likely to provide better customer service, which can lead to increased customer satisfaction and loyalty. For example, a retail chain that invests in employee training and development programs is considering the needs of its employees. 3. Shareholders. Shareholders are individuals or organizations that own shares in a business. They are stakeholders because they have a financial interest in the success of the business and may receive dividends from its profits. Shareholders may also have a say in the governance of the business through voting rights. It's important for businesses to consider the concerns of shareholders, as they have a vested interest in the success of the company. For example, a publicly traded company that regularly communicates with its shareholders and provides updates on its financial performance is considering the needs of its shareholders. 4. Suppliers. Suppliers are individuals or organizations that provide goods or services to a business. They are stakeholders because their relationship with the business can impact its operations and success. For example, a company that sources materials from suppliers that practice sustainable manufacturing techniques is considering the needs of its suppliers. 5. Community. The community in which a business operates is also a stakeholder. This includes local residents, as well as any other groups or organizations that may be impacted by the actions of the business. Businesses can have both positive and negative impacts on the community. For example, a business that provides employment opportunities and supports local causes can have a positive impact, while a business that pollutes the environment or engages in unethical practices can have a negative impact. It's important for businesses to consider the needs and concerns of the community when making decisions. It's important for businesses to consider the needs and concerns of all of their stakeholders when making decisions. This can help to ensure that the business is operating in a way that is beneficial to all parties involved. Businesses play a vital role in the economy. They create jobs, generate income, and produce goods and services that we rely on in our daily lives. They also contribute to economic growth through innovation and investment. For example, a small business that creates new jobs in a community can stimulate economic activity by increasing the amount of money being spent locally. Similarly, a large corporation that invests in research and development can drive innovation and create new products or services that drive economic growth. But the impact of business on the economy and society goes beyond just financial measures. Businesses can also have social and environmental impacts. For example, a business that practices sustainable manufacturing techniques can reduce its environmental footprint and improve the health and quality of life of local residents. This can include things like using renewable energy sources, recycling, and reducing waste. Similarly, a business that supports charitable causes or engages in philanthropic activities can have a positive impact on the community. This can include things like donating a portion of profits to charitable organizations, volunteering time and resources, or supporting local causes. On the other hand, businesses can also have negative impacts on the economy and society. For example, a business that pollutes the environment or engages in unethical labor practices can harm both people and the planet. This can include things like contaminating water sources, emitting harmful chemicals, or engaging in unfair or unsafe labor practices. It's important for businesses to consider their impact on the economy and society when making decisions. This can help to ensure that the business is operating in a way that is beneficial to all parties involved. One way that businesses can do this is by adopting the concept of corporate social responsibility, CSR. CSR refers to the responsibility of businesses to consider the social and environmental impacts of their operations and to take actions that benefit society. This can include things like implementing sustainable business practices, supporting diversity and inclusion, and engaging in philanthropic activities. For example, a large retail chain that implements a program to reduce energy use and waste in its stores is practicing CSR. Similarly, a tech company that donates a portion of its profits to educational initiatives is also practicing CSR. Incorporating CSR into business practices can not only benefit society, but it can also be good for business. Companies that prioritize CSR tend to have better employee morale and retention, as well as increased customer loyalty. Businesses play a vital role in creating jobs and generating income for individuals and households. When a business hires employees, it provides an income for those individuals and their families, which can be used to purchase goods and services, save for the future, or invest in the community. Businesses can create jobs in a variety of ways. For example, a small business that is growing and expanding may hire additional employees to meet increased demand for its products or services. Similarly, a large corporation that is establishing a new facility in a community may create jobs by hiring local employees. In addition to directly creating jobs, businesses can also indirectly support job creation through their supply chain. For example, a manufacturing company may purchase materials from local suppliers, which in turn may hire additional employees to meet the increased demand. Businesses can also generate income for individuals and households through the provision of goods and services. For example, a small retail store that sells clothing and accessories generates income for the business and its employees, as well as the customers who purchase the items. It's important to note that the impact of business on job creation and income generation is not always positive. For example, a business that outsources jobs to other countries or automates certain tasks can lead to job loss and reduced income for local employees. Similarly, a business that engages in unethical labor practices or pays inadequate wages can have a negative impact on the income and well-being of its employees. That's why it's important for businesses to consider the impact of their actions on job creation and income generation. This can include things like supporting local suppliers and vendors, providing fair and livable wages, and engaging in ethical labor practices. For example, a large corporation that establishes a supplier diversity program and actively works with minority and women-owned businesses is supporting job creation and income generation within the community. Similarly, a small business that pays its employees a living wage and provides benefits such as healthcare and paid time off is supporting the income and well-being of its employees. Incorporating considerations of job creation and income generation into business practices can not only benefit individuals and communities, but it can also be good for business. Companies that prioritize ethical and socially responsible practices tend to have better employee morale and retention, as well as increased customer loyalty. Corporate social responsibility, CSR, refers to the responsibility of businesses to consider the social and environmental impacts of their operations and to take actions that benefit society. This can include things like implementing sustainable business practices, supporting diversity and inclusion, and engaging in philanthropic activities. The concept of CSR has gained increasing importance in recent years, as consumers and investors become more aware of the impact of businesses on society and the environment. Many businesses now recognize that CSR is not only a way to contribute to the common good, but it can also be good for business. Companies that prioritize CSR tend to have better employee morale and retention, as well as increased customer loyalty. There are many ways that businesses can practice CSR. Some examples include environmental sustainability. Businesses can implement practices that reduce their environmental footprint and support the use of renewable resources. This can include things like using energy-efficient technologies, reducing waste, and sourcing materials from sustainable sources. For example, a food company that reduces water usage in its manufacturing processes and sources ingredients from local farms is practicing environmental sustainability. Diversity and inclusion. Businesses can support diversity and inclusion by promoting a culture of equality and respect, as well as hiring and promoting a diverse workforce. This can help to create a more inclusive and welcoming environment for employees and customers. For example, a tech company that establishes a diversity and inclusion program and regularly hosts events to support underrepresented groups is practicing diversity and inclusion. Philanthropy. Businesses can engage in philanthropic activities by donating time, resources, or money to charitable causes. This can include things like supporting local nonprofits, volunteering time, or establishing a corporate foundation. For example, a financial services company that establishes a corporate foundation and donates a portion of its profits to education initiatives is practicing philanthropy. It's important to note that CSR is not just about engaging in charitable activities. It's about considering the social and environmental impacts of business operations and taking actions that benefit society as a whole. Incorporating CSR into business practices can have a positive impact on both society and the business itself. It can help to build trust and credibility with customers, employees, and the broader community, and it can create long-term value for the business. Corporate citizenship refers to the responsibilities of businesses to their stakeholders and the broader community. It encompasses a wide range of issues, including ethical behavior, environmental sustainability, diversity and inclusion, and philanthropy. Corporate citizenship is often seen as an extension of corporate social responsibility, CSR. While CSR focuses on the social and environmental impacts of business operations, corporate citizenship encompasses the full range of responsibilities that businesses have to their stakeholders and the broader community. Businesses that embrace the concept of corporate citizenship recognize that they have a role to play in creating a better world. This can include things like 1. Ethical behavior. Businesses can demonstrate ethical behavior by acting with integrity, honesty, and fairness in all of their dealings. This can include things like adhering to laws and regulations, treating customers and employees with respect, and avoiding fraudulent or deceptive practices. For example, a pharmaceutical company that adheres to strict regulations around the development and testing of its products is demonstrating ethical behavior. 2. Environmental sustainability. Businesses can demonstrate their commitment to environmental sustainability by implementing practices that reduce their environmental footprint and support the use of renewable resources. This can include things like using energy-efficient technologies, reducing waste, and sourcing materials from sustainable sources. For example, a consumer goods company that uses recycled materials in its packaging and reduces water usage in its manufacturing processes is demonstrating a commitment to environmental sustainability. 3. Diversity and inclusion. Businesses can demonstrate their commitment to diversity and inclusion by promoting a culture of equality and respect, as well as hiring and promoting a diverse workforce. This can help to create a more inclusive and welcoming environment for employees and customers. For example, a professional services firm that establishes a diversity and inclusion program and regularly hosts events to support underrepresented groups is demonstrating a commitment to diversity and inclusion. 4. Philanthropy. Businesses can demonstrate their commitment to social responsibility through philanthropic activities. This can include things like supporting local nonprofits, volunteering time, or establishing a corporate foundation. For example, a retail company that partners with a local nonprofit to provide meals to underserved communities during the holiday season is demonstrating a commitment to philanthropy. Corporate citizenship is not just about doing good for the sake of it. It's about recognizing that businesses have a role to play in creating a better world and taking actions that contribute to the common good. It's about considering the impact of business operations on all stakeholders and taking a holistic approach to business decision-making. Embracing the concept of corporate citizenship can have a positive impact on both society and the business itself. It can help to build trust and credibility with customers, employees, and the broader community, and it can create long-term value for the business. The relationship between business and government is complex and multifaceted. Governments play a number of roles in relation to businesses, including regulating their activities, providing a legal framework for operation, and collecting taxes. One of the primary roles of government in relation to business is regulation. Governments regulate businesses to protect the interests of consumers, workers, and the broader society. This can include things like setting standards for product safety, protecting the environment, and ensuring fair labor practices. For example, the government may regulate the safety of food products to protect consumers from harm. This can include things like establishing food safety standards, conducting inspections, and recalling unsafe products. Similarly, the government may regulate environmental practices to protect the environment and public health. This can include things like setting emission standards and enforcing laws against pollution. Another important role of government in relation to business is providing a legal framework for operation. This can include things like establishing contract laws, property rights, and bankruptcy laws. These laws provide a structure for businesses to operate within and help to ensure fairness and predictability in commercial transactions. Finally, governments collect taxes from businesses to fund public goods and services, such as schools, roads, and healthcare. Taxation can take a variety of forms, including income taxes, sales taxes, and property taxes. The amount of tax that businesses are required to pay can vary depending on the jurisdiction and the type of business. It's important to note that the relationship between business and government is not always straightforward. There can be tensions and conflicts of interest, and businesses may sometimes lobby for favorable regulations or lower taxes. It's the role of government to balance the interests of businesses with the broader interests of society. Businesses play a vital role in global trade, which refers to the exchange of goods and services between countries. Global trade allows businesses to access new markets, source materials and labor from around the world, and benefit from economies of scale. There are several ways that businesses can participate in global trade. One way is through exporting, which refers to the sale of goods and services to foreign countries. Exporting can help businesses to expand their reach and access new customers. For example, a small clothing company that sells its products to customers in other countries is participating in global trade through exporting. Another way that businesses can participate in global trade is through importing, which refers to the purchase of goods and services from foreign countries. Importing can help businesses to access a wider range of products and materials, and it can also help to reduce costs. For example, a large retail chain that sources products from a variety of countries is participating in global trade through importing. Businesses can also participate in global trade through foreign direct investment, FDI, which refers to the acquisition or establishment of businesses in foreign countries. FDI can help businesses to access new markets and take advantage of local resources and expertise. For example, a technology company that establishes a research and development center in a foreign country is participating in global trade through FDI. The role of business in global trade and international relations goes beyond just the exchange of goods and services. Businesses also play a role in shaping international relations and promoting economic development. For example, businesses can act as a bridge between countries by establishing partnerships and relationships with foreign counterparts. This can help to build trust and understanding between nations and contribute to economic development. For example, a large corporation that establishes a joint venture with a foreign company is playing a role in shaping international relations and promoting economic development. Businesses can also contribute to economic development through their investments and operations in foreign countries. By creating jobs, providing goods and services, and supporting local suppliers and vendors, businesses can help to stimulate economic growth and improve the standard of living in the communities where they operate. For example, a mining company that establishes a facility in a developing country and invests in local infrastructure and education initiatives is contributing to economic development. It's important to note that the role of business in global trade and international relations is not always positive. Businesses can also have negative impacts, such as contributing to environmental degradation, exploiting local resources and labor, or engaging in unethical practices. That's why it's important for businesses to consider the social and environmental impacts of their operations and to take a responsible approach to global trade and international relations.